Good afternoon, ladies and gentlemen, and welcome to the Solid State PLC results presentation and introduction to the acquisition of Custom Power following the successful general meeting held this morning. To start with, if we could cover a couple of housekeeping items. Before we begin, we would like to submit the following poll, which you will see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via solidstate@walbrookpr.com. The company may not be in a position to answer every question it receives during the presentation. However, the company will review all questions submitted today and publish responses where appropriate. These will be available via your Investor Meet Company dashboard. Finally, we would like to remind you that this presentation is being recorded. Now, on this particular occasion, we're going to start the presentation with a short video. We have had a request in the past from investors that they would like to see an illustration of the types of products that the group is responsible for, and also some of those products that have come from some of the acquired companies as well. So in this instance, we're going to show the Harrier range of cameras from the acquisition of Active Silicon, which we'll play in just a second. We also have in handouts a glossary of terms, which has been asked for in the past, so that in terms of the acronyms, you can see exactly what those mean. So following the video, you will hear from Chief Executive Gary Marsh, Group Finance Director Peter James, and Matthew Richards, Managing Director of the Systems Division. Mark, if I could ask you to turn to video.
Active Silicon, providing the perfect autofocus zoom camera for your application. Harrier autofocus zoom cameras range from Full HD to 4K imaging and include the option for additional onboard video processing. Our highly reliable, cost-effective imaging solutions can be easily integrated into new or legacy systems. The Harrier camera range starts with very lightweight, compact 10x zoom models and goes up to cameras with 40x optical zoom. Capture fast-moving objects with our global shutter camera. With a wide range of different cameras, there's an Active Silicon Harrier camera to suit every application. Each camera is available in versions with LVDS, SDI, USB 3, HDMI, Ethernet IP or MIPI CSI2 video output to provide endless possibilities. Over 30 years' experience of designing and manufacturing vision components and embedded systems means we can also provide first-class advice, product customization, and technical support. Whatever your requirements, Active Silicon is the ideal partner for providing your autofocus zoom camera solution. Contact our team today.
Hello. Hi Peter, if you could just unmute your mic, that's great, thank you.
Hello, good afternoon. Welcome to our presentation this afternoon. Thank you for joining us. We hope you find it informative, and we'll be very happy to take your questions after we've completed the slide deck. I'll just kick off now. So you've heard the introductions, you've got a lovely photos there. The only points I'd make here really are we've got an experienced and stable both executive and senior management team, and the acquisition of Custom Power will be under responsibility of Matthew, who's joining us today within the Power business unit. So I'll kick off now. So Solid State provides trusted technology for demanding environments. We do that in partnership with a blue chip customer base that we've built up now for more than 5 decades. The business operates through 2 divisions. Our components division supplies both own brand and franchise components into the electronics market, and these include semiconductors, optoelectronic and electromechanical devices. Our systems division provides engineered solutions where quality, reliability and performance are paramount to our customers' harsh environment applications. The systems division focuses in three core areas: power, as I've just mentioned, that's battery pack manufacturing, computing, and communications. Across the group, our sales are engineering-led, designing high value-added solutions to fulfill our customers' demanding applications. We don't operate in commoditized markets or supply commoditized products, so securing strong and resilient margins. We service a diverse markets where there's really one common thread: the need for high reliability and high performance, specifically targeting high growth markets in green tech, industrial IoT, defense, medical, and transport. I'll briefly touch on the operations of the company. Our headquarters are in the industrial heartland of the UK, in Redditch, just south of Birmingham. We operate a decentralized business model with 5 production locations here in the UK and currently 1 in the USA, based in Indiana. And we've got a growing team of approximately now 325 employees. One point I would make here, that this decentralized approach really served us well during the pandemic. It was key to our success during that period. Our extensive industry experience has enabled us to successfully manage the macroeconomic challenges of recent years. Our specialist technology supports a diverse range of market sectors, giving the group resilience, and the business remains agile and proactive to respond to new and existing customer requirements. We've built over many years strong key customer relationships and are now securing larger contracts as the product range expands. We have an extensive supplier base, allowing the group to design best technology for a given application, enabling preemptive management and mitigation of supply chain challenges. We bring together technologies across the group that provide engineered solutions. The most recent examples I'd give you are projects we've had for Cyanode, B Hero, and TFL. We've announced all of these through the RNS Reach. So if you care to look at those at your leisure, I'll give you some more colour. For those not familiar with Solid State, this is our divisional structure, including our latest acquisition, Custom Power. Custom Power will form part of our systems division under Matthew's leadership. The brand Custom Power is valuable to the group, and we're considering adopting this for our enlarged power business unit. As such, we've registered the company name in the UK. We've also registered the domain name custompower.co.uk. Post-deal, we put in place a marketing and promotional plans to significantly raise our profile both in the UK and the US. We've got quite a lot of material to cover in the presentation, so I'll only sort of briefly touch on this slide. But looking in more detail at our organisation structure, here you can see it's made up of 4 business units in each of our systems and components divisions. We're very proud of our track record in acquisition selection and integration. Last year, we celebrated a double anniversary, 50 years since the company was founded, together with our 25th year on AIM. Throughout, we've been consistently cash generative and returned profits to our shareholders. We acquired SteerTight in 2002, and this was really the genesis of the systems division that you see today, introducing computing and battery pack manufacturing to the group. Prior to Custom Power, we've acquired 12 businesses, including, as you can see there, 2 last year. And we seek out earnings enhancing, cash generative companies that are clearly aligned to our strategy. So looking at our strategy, it has 4 key elements. Firstly, broadening our technology and product portfolio. Recent examples here include Active Silicon's range of imaging products, including autofocus zoom cameras that you can see top right, and you also saw in the video we've just played. With Custom Power enhancing our battery management systems, pack heating, and fuel gauge software. We'll come on to that in a little bit more detail later. Internationalization of the group. Last year, the Active Silicon and Willow acquisitions helped increase international sales from 30 to 38% of total revenue. Custom Power has a strong position in the US market with tier 1 OEM customers, and that will bring us much closer to 50%. Own brand products. Here the group continues to build on our optical sensor range for medical applications, our electromechanical relays and contactors from the recent Willow acquisitions are used in energy storage and EV applications, and Custom Power now introduces high reliability, lightweight battery pack solutions for drones. And finally, investment and development of our talent, both through recruitment and acquisition, is there above all has been key to us delivering on our growth ambitions. I'll hand over to Pete now. I'll talk you through to some of the numbers.
Thanks, Gary. So this is our investment case, and you can see here that it shows our track record over the last 5 years. So pleasingly, we've been able to deliver growth in revenue and profits, and that's been through a combination of organic growth and acquisitive growth. During that 5-year period, we've not had any dilution. Obviously, we have issued shares to fund the acquisition of Custom Power. The historic performance in terms of revenue, we're seeing 16% CAGR over the last 4 years. Operating profits are up to 210 basis points to 8.7% this year, and the adjusted fully diluted EPS has shown 23% CAGR. So we're very pleased with those results over the last 4 years. Looking forward, we monitor and manage cash generation as a critical metric for us. This is critical because it enables us to ensure we can deliver our progressive dividend. We've increased the dividend to 19.5p this year. We deliver value through both a combination of income and growth. And the key metric there is TSR that we'll be monitoring going forward. In terms of the chart there, you can see on the slide, we manage our expectations prudently. The dark blue sections are the expectations, the guidance that was there at the beginning of the year. We really only count chickens when they hatch. You can see the light blue is the outturn at the end of the year, and pleasingly, we've been able to issue pretty significant upgrades in each of the last 4 years. Pleasingly, the record order book at the end of May, just shy of 90 million, gives us really good confidence that going into the year ahead, we can hopefully aim to continue that trend. So coming on to the results for this year, start with a couple of charts. We can see there some very solid results. Foreign exchange headwinds have hampered the top line growth this year. However, that does have a consequence at a revenue level, but actually it does depress the reported revenue growth, but it does benefit the gross margin. So you can see the benefit there at the gross margin level because we have a natural hedge. So coming on to the numbers in the table, the reported revenue growth benefits from the first full year of Active and Willow. So like-for-like revenue growth is up mid-single digit. Gross margins, as I said, benefiting from the FX headwinds, are up a couple of percentage points, but on an underlying basis, they're marginally up, but stable. But pleasingly, the operational gearing you can see coming through with that improvement in operating margin to just under 9%. With those acquisitions and the acquisition of Custom Power, there's some pretty significant deal costs this year and non-recurring costs associated. The acquisition fair value adjustments relates to an increase in deferred contingent consideration for Active Silicon, which is really pleasing because that represents outperformance above our initial expectations. So we've increased our provision for deferred consideration in this year. So what does that deliver? End of the year, 70.6p of fully diluted adjusted EPS, which was ahead of our 5-year target of doubling EPS to 60p. So very pleased with that outturn. Coming on, that strength of performance has given us the confidence to increase the dividend to 19.5p, as I said previously. If we look at cash generation, the strong cash generation has really enabled us to invest in inventories. That's been absolutely critical to delivering the revenue this year, but also to securing the ability to have a good start to the year ahead. We've invested about £7 million in inventories this period, and you'll see that when we look at the balance sheet. In terms of CapEx, we have increased our investment this year with investment in EMC and a wire bonder in our battery facility down in Crewkerne as two of the bigger programs we've invested in. And those are going to be really critical to delivering operational efficiencies as we go forward. Acquisition payments in the year relate to Active Silicon and Willow. The deferred consideration you see there on the balance sheet of 6.6 million, again, relates to the deferred consideration for those two acquisitions. 4.6 million of it was paid in Q1 just gone, and the last 2 million is the final part of deferred consideration for Active Silicon payable next year. So final one for me before I hand over. The balance sheet, as I said, you can see there the very significant increase in inventories. That's absolutely critical for us and secures our ability to get products out the door in Q1, where we've had a really strong start. Net debt, 5.2 million, which reflects the deferred contingent consideration, and 1.4 million cash with banks. And in terms of Custom Power, following the general meeting today, we've raised 28 million of equity roughly, and we've got a new term loan facility with Lloyds for 13 million pounds. I'll hand over to Matthew, who will add a little colour on the acquisition of Custom Power.
Yes, thanks, Pete. So there is a comprehensive investor presentation on the Solid State website, and that details the acquisition. The next few slides provide some colour on the transaction, and Pete will talk through the structure of the deal, the funding, and the financial metrics shortly. So the electrification of most everything is driving significant market growth. Net zero targets, autonomy, and a cordless world are creating enormous opportunities. We actively sought out the opportunity to acquire Custom Power. It followed an extensive search. We worked with a consultant that was recommended to us, and including Custom Power, we researched 47 businesses, principally in the US, but also in Canada. We were looking for a battery pack producer that was profitable, cash generative, business in markets that were complementary to our own. That search highlighted actually there were very limited options that fulfilled the criteria. Many were smaller regional players at early stages of their development in this growing sector. This transaction is a fantastic fit. It delivers on the 4 strategies that Gary highlighted. So internationalization, own brand product, technology enhancement, and talent development. Now, this business looks and feels like our power business, albeit they've got the palm trees there. But in all seriousness, like our battery operation, it's well established, highly profitable, and cash generative, with significant opportunities for growth. And you add to that the force multiplier effect of bringing 2 great businesses together. It's a formidable union. Having had our team of 5 people visit the US, and Custom Power's CEO, Mel Weiss, come to the UK, it was clear, and it is clear to us, that we share culture and values, much in common and complementary too, by way of markets, customers, suppliers, technology, and skills. And with a dozen acquisitions under our belt, we know how important that fit is. And in this case, the indicators are absolutely positive and the deal risk reduced as a result. So where do we fit in the supply chain, and where is that value generated? Both businesses are not into the materials in the blue, or cell manufacture in the middle there in green. We're not chemists. We both operate across all of the red section here, where the value resides in the battery management system, the software, the module design, pack materials, and pack assembly. Now, I expect you're familiar with the likes of Ilika and Anti-Power. They are absolutely working on exciting chemistries, and we have relationships with those businesses and overseas producers too. We consider those certainly complementary relationships. We can make product in volume, so adding significant value with today's chemistries while remaining agnostic as new offerings come to the market. We can provide a roadmap to our customers as trusted subject matter experts. Now, cell suppliers are conservative. They will only work with trusted, proven pack manufacturers with scale, risk management combined with in-house design skills. And this position will be further enhanced with the marriage of custom power and solid state. Pete touched on it. Our recent investment in wire bonding technology allows us to produce battery packs more efficiently, enhance safety and reliability, and that's a technology we would look to roll out into custom power. Thanks, Pete. So, the 5 synergies that will power the wheel, as we say: reciprocal territory benefits with cross-selling opportunities. Blue chip customers, existing and prospective, are looking for a supplier that can support them on an international scale. Custom power have some exciting technology, including fuel gauge solutions, battery heating products, and experience in lightweight materials for drone technology. Our UK operation brings a pedigree in the energy sector and the use of primary high temperature battery technology. In markets, custom power brings aerospace and defense experience along with medical, and there's good synergy in subsea, UAVs, transport and energy. By way of market split, it's something in the order of 45% industrial, 30% defense, and 25% medical. We've got customers that have existing interests in our plans for the US, but furthermore, we look to exploit the existing custom power relationships, and they have some prestigious names on their books: Lockheed Martin, Philips, Honeywell, 3M, and others too. In the world of batteries, the relationship with the cell manufacturers is crucial, and both businesses punch above their weight with the major brands. You might not have heard of Moly, but it's an industrial provider to many household products that you might see today in your home, not least bagless vacuum cleaners. And we know that firm, Moly, very well at a senior level, personally, and my management team. And this deal will only enhance that relationship. Not going to spend long on this slide here, but it just reiterates the importance of supply chain and relationships. Some important brands here. To the right, it's some of the traditional brands that we've worked with in the high power sector, and multiple chemistries over to the left, including Enesis, who are actually strong in lead acid. It's still an important technology. And we share these down the centre of some household names that you'll recognise, where we share supply chain. So I'll hand over back to Pete now, and he'll give some financial detail.
Thanks, Matthew. So probably the first point to make on this slide, which has got a 3-year history for custom power, is custom power is margin accretive to the existing group at every level: gross margin, operating margin, and net margin. On this slide, you can see there's a 3-year financial history. I've stripped out a couple of non-recurring contracts that they had in 2019, where they had a piece of business that went to a low-cost solution rather than a bespoke solution. And in 2020, they had a one-off contract where they did some battery packs for COVID hand sanitizer pumps. So that contract, pleasingly, with COVID subsiding, is not recurring. So what you can see in the body of the table is their growth in their target markets, where they've really focused on customers where their engineering value is recognised. And if you look back in 2019, they had one account that was over $1 million. By 2021, they've grown that to nearly 9 accounts that have got over $1 million worth of business. So they've really focused on those key market sectors of defence, medical, and industrial, where their engineering prowess is really valued. Coming on to the next slide here, you can see here what I've done is the deal structure is $30 million on completion, $10 million deferred, and $5 million paid based on a performance hurdle, achieving a revenue performance of $37.5 million. So they've got 18-month window in which to achieve that hurdle. We believe that hurdle has got a stretch, but it's eminently achievable as well, particularly when we bring the two businesses together. The first column in the table is a repeat of the 2021 results. The second column models them achieving that $37.5 million using the margins from 2021. And you can see there that would deliver $3.2 million of profits at the bottom line. We've been asked many questions about margin pressure and inflation pressure, and whilst absolutely their business, like the entire world at the moment, is seeing inflationary pressures, I've not modelled any operational gearing benefits, and you can see on the previous slide there are some significant operational gearing benefits. So we believe that this picture is relatively prudent, as the operational gearing will far outweigh inflationary pressures. So overall, this is a very positive acquisition. It's earnings accretive to the group. And the final column on that table just translates that to pounds at £1.25 to 1.
Thanks, Pete. So just to summarise then, what's the investment case? Custom Power, it's profitable, it's cash generative business, and we consider we have negotiated attractive deal terms. The acquisition will be built on strong foundations, with both businesses enjoying record open order books and exciting prospects. There's very little overlap, giving us great cross-selling opportunities, and with the international client base adding scale, we'll be in the position to offer our customers much enhanced engineering capabilities. Prior to the deal, the group's revenue was something in the order of a 60-40% split components to power and systems. Post-deal, it will be closer to a 50-50 split, with the power business unit representing some 30% of the enlarged group. So we consider that the transformational nature of this acquisition will open up the prospect, or when the prospects for the markets improve, of a valuation re-rating for all of our shareholders.
Thanks, Matthew. So just to finish off here, in technology expansion, our product range across the two divisions, both organically and through current and future acquisitions, will enable us to penetrate these high growth markets and so gain market share. We've demonstrated resilience through our long established focus on government-backed high barrier to entry sectors in security, defence and transport. And we've seen record order intake in the period, with this momentum continuing into Q1, giving us confidence over customer demand in the year ahead. The collaboration with customers and suppliers that began as long ago as the late summer of 2020 to manage and mitigate supply chain challenges is now translated into strong organic sales growth in this new financial year. And finally, this financial year marks the beginning of our next 5-year target. The acquisition of Custom Power, coupled with our organic growth initiatives, provides the group with a strong platform for further growth. So thank you for your time. And we're happy to take any questions now.
Super. Yeah. Thank you, Gary. Thank you, Pete. Thank you, Matthew. So now if we could turn to the questions, we had a number of questions submitted ahead of the presentation. However, please do continue to submit questions using the Q&A tab. I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform, and that will be available shortly after the presentation itself. Additionally, your feedback is important to the company, so immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback. While you're submitting questions, maybe we can just turn to some that were submitted in advance. And what I'd like to do, if I can, is just break them into two sections. So we've got questions that relate to the results and group, and then obviously we've got lots around the acquisition itself. So if we can just start with the group and results based ones. I'm going to combine two questions if I can. They both relate to inventory. Thank you, Nick B. How are you dealing with issues around supply chains, and how do you ensure you can meet the growing needs of your customer base? Is it simply through increasing inventory? And if we can couple that with another question, which is, how do you manage a return to normal levels of inventory? Both related.
Do you want to take those?
So if I start with those, I think it's far from just about increasing inventory. The teams, both Matthew and John's teams, work very, very hard with the customers to understand their demands over the period. So the order book, you can see, has by working with customers, we've got extended visibility. We've then worked with our supplier relationships to ensure that we've got scheduled orders with suppliers, and that has required us to take inventory to ensure we guarantee supply. So it's a combination of many things, but it's about managing that relationship between customer demand and supplier availability. And the teams at the coalface in Matthew and John's businesses work very, very hard to manage that. And I think it's fair to say our strength of balance sheet has given them a competitive advantage over some of our smaller competitors who aren't necessarily in a position to put that inventory in place. I guess coming to the second part of the question, Tom, where you talked about how do we normalize, get back to a normal position. I think supply chains, if John were here, he would say we're not going to see significant improvement in this financial year, so the year ending March 23. But as we come out of the period beyond, certainly we do hope to see a normalization, and that will provide an opportunity for us to reduce the level of inventories that we're holding as lead times reduce from the very extended periods we're seeing at the moment. I think, inevitably the level of unwind will take some time, and it's about managing the unwind as the teams have managed the build of inventory. And we're already starting to work with suppliers and customers to manage that process today.
I'd add to that. I mean, it is closely monitored by the board. Michael has a phrase: "Stock is something we do every day." So it's a key part of monitoring the business, but across not just the executive team, but also in our senior management team, we have a lot of experience of going through these cycles in the semiconductor industry, and it will be closely monitored.
Yeah, great. Okay. One other group-related question. Now that you have greater interest in the US, what is the FX effect?
So, Custom Power obviously adds pretty significant US dollar revenue, cash, and profits. So traditionally, we've managed currency by establishing a natural hedge. Because we have deferred and contingent consideration to pay, the excess dollars that come out of Custom Power will be used to fund some of that consideration in the near term. And then that gives us some runway to re-establish a natural hedge on a go-forward basis. As a medium-sized organisation, we absolutely can and do look to use currency contracts should it be appropriate, but far more effective for us is to establish natural hedges, and it's something the business has done for a long time to manage that risk.
Great. Okay. So if we could just move on now to some questions which relate to the acquisition. I'm just going to group a few together again, if I can, because actually I think these talk to your acquisition strategy, and you have touched on a couple of these answers already. So this will help just to bring it together. So first, the question which you did answer was, what was the process used for making this acquisition? How many potential acquisition targets did you look at before choosing this one? If I can just combine that with one of Matthew R's questions, great results. In terms of your acquisitions, do you lock in key personnel? And moving forward, what's your thoughts on further acquisitions? If I could just combine that with John S., who said, you mentioned that it's important for acquisitions to have a similar culture. I'd be grateful if you could describe this culture.
Well, maybe if I start here, chaps, feel free to join in. It was a long process. It's 2 years in the making, the acquisition of Custom Power. As we said in the presentation, we researched 47 businesses across the whole of North America. We looked at markets were very important. We don't like high concentrations in certain markets. We found a few examples where they were highly concentrated. We looked very closely at supplier and customer concentration as well. And again, that was a key criteria. So it took a lot of research, but we believe we found an excellent acquisition in the United States for us.
I mean, it's Matthew, if I could chip in on the culture. I did touch on it, well, more than touch on it. I made it a main point of one of my slides and why I consider it because of the good culture. We've already established great working relationship. It's what I do actually. Culture comes first for me, and I think it's very complementary in skill sets with the Custom Power team, and I will be investing a lot of my time to ensure that culture continues. We have brilliant culture within Solid State already, and what I've witnessed and seen, they also have it in Custom Power. So I am confident on that particular point.
I think that's an area. It's not a sort of classic sort of due diligence area to look at, but having made 12 acquisitions, it's something we've learned over the years that cultural fit to make the acquisitions work is key. Matthew, maybe you want to talk about the areas that are good business and not.
Yeah, very much. It's as much as knowing what constitutes a bad business to help us. We found to target good business, and we again shared much in common and had some good conversations about the sorts of business that we would avoid. Commoditized business. Essentially, we are looking for challenging applications where we can use our engineering capability and resource to differentiate and add value for ourselves, obviously, but our customers as well. So harsh environments, challenging applications below sea, autonomy, increasingly UAV based for both defense and industrial. Anything that's difficult, batteries don't like the cold. We set the bar high, that allows us to real barriers to entry. So I won't go through the catalogue of things that we avoid, but we are concentrating on medium volumes with some hundreds or thousands of packs might be produced a month with good vision, good horizon of production. So get designed in. The clue is in the name, Custom Power, and we rather like it, as Gary said. We produce solutions for our customers, but then get designed in for the long term.
I guess the final point of the question there, Tom, was around the staff and how we tie the staff in. Yeah. Custom Power have got a very experienced senior management team led by Mel Weiss, their CEO. They are battery experts through and through. They are very additive and complementary to the team that Matthew's already got in his power business, and I think both teams are looking forward to working together. The senior team all have some level of equity stake and therefore benefit from the earn-out element of the consideration as well. But we will also look to establish long-term incentive plans, share options plans for the key members of that US team, as we've done with our senior team in the UK as well. Clearly, they'll need to be slightly different because of the different tax regime in the United States.
Any areas we've not covered there, Tom?
No. I think the point that you've made previously is that for people coming into the enlarged group, it gives them greater career opportunities as well. So actually, it does cut both ways for those people who come in through the acquisition strategy. Super. So another quick one in relation to synergies. What revenue synergies does this business have with your existing business?
I mean, I pick up on that one. Hopefully, my responses and my slides gave you some colour, and I really recommend that you look actually on our website at the full slide deck, which really talks a lot about synergies. We are both producers of custom battery packs. Actually, there is not a very significant customer overlap. Which is exciting. That we've got customers existing that are looking for us to be able to produce solutions in the US. Batteries are heavy, as I mentioned, and therefore being able to manufacture them close to your customer or significantly close to the end use application is a good thing. So there's real synergy there. Some of the blue chip customer names that Custom Power have on their books are surely going to be interested in a global capability. These are global companies, so having a global a company able to provide solutions on a global scale is desirable. So that I would say is the case. So synergies as well. I mean, broadening the question, technology and markets as well. So I would say some nice overlap, but also high levels of complementary markets and customers.
Right. Okay. Will the components made by the acquisition target be used in the products manufactured in Europe?
I would say that's unlikely for the reasons I actually mentioned above, which is, we're not going to be shipping batteries around the world. It's the opposite, really. We're looking to, what we are going to do is to carefully exploit the technology and know-how, very much in line with export control. We understand that. But the custom power team actually have a really strong engineering group. I've met them, I'm impressed with them, and again, using the word complementary, but they really do add to the skill set of our team. So rather than bringing products over, I would think bringing out solutions and know-how in some of those fields, battery heating, fuel gauge technology, lightweight materials. They're working with Kevlar, for example, in their battery solutions.
Great, thank you. International sales is a topic. So thank you, Matthew R. Can you expand on how you look to expand sales internationally? How important is the US in your plans moving forward?
I'd say it's very important. It's the largest market in the world. We've had customer requests, as I think Matthew touched on earlier, to have a presence over there. So it's important. One of the areas that Custom Power brings is through what's known as the ERA, the Rep Association in the United States. There are, I believe, 13 territories across the US, which Custom Power have representation in all of those. And we will look to introduce other products from the group through that rep network to cover the whole of the United States. So it's very important. Also for us, development of business in mainland Europe is key, and that's something we will look at with future acquisitions.
Yeah. Okay, thank you. What impact do you think 5G will have on revenue growth across the business?
We have a good portfolio of products in 5G. It's an important area, along with industrial IoT, AI for industry. That in important areas, and we're developing our suite of products there, not just in systems that we're talking about here, but very much so in our components division, and it will be an important area of growth. I think I touched on that in the final slide of the slide deck.
Great, thank you. Right, Scott M, thank you for your question. What caused Active and Willow to perform so strongly last year?
Partly coming out of COVID. They've got some good design, as we found in our own business. They had some very good designs that were certainly held back with the pandemic, and they moved into a sort of production phase as we came out of the pandemic. I think it helped being part of a larger group. Matthew, I don't really touch on early successes we've had with Active Silicon.
Yeah, I was going to. Their success is for many reasons, as Gary's already described, but it gives me opportunity to mention a success that we had jointly with Active Silicon. You might have read the RNS on the project for the London Underground. It's actually for the Piccadilly line or Deep Tube programme, and it's for the safety of opening and closing of the doors. The project customers we knew very well, but we didn't have the technology necessarily to execute that. But Custom Power had that skill set, the ability to design custom computing solutions. So the effect there was the sum was greater than the parts, and that's something I'm looking to model again on with Custom Power acquisition. So
I'd also say very similarly with Willow. on the component side, you look at some projects we'd had sort of 6 or 7 years ago, we might have had 1 or 2 devices in a project. With the addition of Pacer and certainly Willow and other acquisitions we've made on the component side of the business, we're expanding our range. So we're now achieving larger contracts with our customer base, so getting to 5, 6 devices and beyond. And certainly, we were able to introduce customers to Willow and vice versa. We hadn't had an EMEC range in the group, electromechanical range in the group, and that's been very important. But we've certainly taken advantage of that opportunity since the acquisition.
I think, Tom, the other thing I would add is the structure of the group having both a systems and a components division has enabled us to manage the supply chain challenges that we've seen in the semiconductor industry. Having the strength of the group balance sheet, again, has helped us manage and mitigate some of those challenges. And I think, being part of that bigger group, as Gary said, has been absolutely critical in terms of them being as successful as they have in the last 12 months.
Yeah, great. Okay, that's super. Last question, and rather fittingly, a question relating to your growth ambitions. Thank you, Melville. Would you agree that doubling EPS over 5 years could be seen as somewhat conservative? What, if any, constraints would you see in aiming rather higher? Perhaps sacrificing dividend growth?
I believe it's a good growth ambition for us. We set that ambition to double it and actually exceeded it during the previous 5 years. We will always strive to do the very best we can, and as I say, we beat that ambition in the previous 5 years. But it isn't just EPS; it's total shareholder return. That's a metric that's important to us, and I think 20% compound annual growth rate over the period will be a good target to achieve. It's important we balance both dividend and other areas that we look at. So I think dividend will be important. Clearly, we have strong growth ambitions for the business, but we're very proud of our track record, having paid a dividend to our shareholders for all of the last 25 years that the group's been on AIM. But we'll continue to monitor that. But it's important we provide a progressive dividend to our shareholders.
I think for me, it drives really good business behaviours. It really keeps us focused on making sure that we are generating cash. It's very important to ensure that we are profitable, cash generative. It's a key part of what we look for with acquisitions. I think the dividend yield is relatively lower now than it was 5 years ago. And as we continue to grow, it will become a smaller part of our total shareholder return. But nonetheless, in terms of a business discipline and a cultural behaviour, it's absolutely part of the management team, the executive and the board's focus to make sure that we are profitable and cash generative as a group.
Yeah, agreed. Okay, and I think that's echoed by Scott M, who closes out with a comment rather than a question, but says, "Great job, guys. Congratulations on great results." So thank you, Gary, Pete, Matthew, for updating investors today. And could I ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If anyone has further questions or would like additional information on Solid State, please do get in contact via solidstate@walbrookpr.com. And we will now take the opportunity to close this session and thank everybody for attending.